What's going on, guys, and welcome back to another video. So today I want to discuss two or three main things. Firstly, briefly the overall current market conditions and why you shouldn't panic sell, and I'm also going to put my money where my mouth is, so to speak, and buy more stocks in today's video as well, and we'll discuss my reasoning behind it. Just before we get into all of that, can I please ask if you're new around here to consider subscribing, as we're now only 17 subscribers away from my main goal of having 1000. So it'd be brilliant if you could get that by the end of the weekend. And with all that being said, let's dive right on into my trading 2-on-2 portfolio. So over the last few weeks, as I'm sure you're already aware, the markets have been quite volatile and a lot of people have been panic selling, mainly due to the fact that they think that there's a stock market crash on the horizon. The markets have been going down probably a few percent nearly every day at this stage. However, as a long-term investor like myself, I'm not worried one bit at all, because markets are cyclical. As I always say, they always have to go up as well as down, and if they only went in an upward direction, the markets will become hyperinflated and there'll eventually have to be a crash anyway. So all these kind of corrections are always kind of welcoming in my opinion, and it's a great opportunity as a long-term investor, and especially my strategy of dollar cost averaging, that it's really kind of welcoming in my opinion. For the last week or so, I've deposited a further €607, and again, that's just to take advantage of dollar cost averaging. However, I would recommend, and again, I'm not a financial advisor, but it's kind of common sense, to always have a cash reserve sitting on the sideline for when crashes like this do happen, and to not lump it all in at once. For example, if I have, let's say, a few thousand more in cash reserves ready to invest, I'm not going to invest it all in the same day, just in case. For example, just like right now, when I invested last Thursday or Friday, the markets have went down even more since then, since last week. So if I put all my money in last week, I'd have had no more to put in this week, which would have effectively made my dollar cost averaging worse. So that's why it's always very important to continually have some of your overall investment capital in cash. Even €50 invested today might not seem like a whole lot in the grand scheme of things in comparison to, let's say, the 7,500 that is in the portfolio. But that's what long-term investing is all about: patience and consistency. So by continually trickling in small amounts of capital into companies that are in the red or down significant amounts, it's a great way in the long term to make more money. Another thing you should learn from this kind of crash is that diversification is key. For example, on screen here we can see the likes of my communication services, and also over here as well my financial sectors. They're up over 20% each. However, if you look at my consumer discretionary, it's down 5%. So definitely different sectors kind of react differently to different market environments. The markets have been going down a lot over the last few weeks. There's probably a lot more than 3 companies here that are in the red. So what I'm going to do today is just focus on 3, which we'll discuss throughout this video now. Again, there is other companies that I could take advantage of as well, but I'm going to wait until the middle of next week. Usually there's a kind of sell-off on Friday evenings and the markets kind of pump a small bit Monday morning. So I'm going to wait until the dust settles, so to speak, next week to invest another few hundred into the other companies that were not today. So in communication services, we're going to leave that as we're up 22% overall. Walt Disney and Facebook are doing quite well. In consumer discretionary, we're down 5.2%. And the one company here, although all 3 are in the red, we're going to just focus on Tesla today. And we're going to put 20 of the 50 into this company. The order is now placed and it will be executed once the markets open at 2:30 GMT Irish time. So then we go into consumer staples. We have 3 companies here. We're pretty much break even, down about 1%, and that's mainly due to FX impact. 2 of the 3 are in the red. Pepsico and P&G were 2 stocks that I already dollar cost averaged in at the beginning of this week. So next week again, as you can see, P&G is still down 6%, so it's dropped even more. Again, that's why it's very important to keep cash reserves. Next week we're going to probably focus more on P&G as well, to try to get my overall average price down. In the energy sector, we can see we're up 16.6%. However, 1 of the 3 companies is in the red. ExxonMobil is up 71.6%, which is very impressive in my opinion, and Chevron is up 43.8%. But iShares Global Clean Energy at the moment isn't doing great. Again, I discussed yesterday in a video, they're still well above their kind of this time last year. They're up like 40 or 50% still, I believe. Again, don't quote me on that, but from my memory, that's what they're up. But however, the last few weeks they've been going down in value, mainly due to Plug Power, their main holding, going down significantly, and there's only 30 stocks within that ETF. So maybe over the weekend I might do a full in-depth video on iShares Global Clean Energy and kind of some updates on why their overall price is dipping. But for now, I'm happy to dollar cost average, and I'm going to put a further €20 in here as it's down 17% at the moment. The UK market has already opened, that order went straight through, And you could even just see just there how easily putting 20 euro in here shaved 2% off the red. So it went from about 17 down to 15% in the red. Again, that's still bad in my opinion. But again, just putting in money slowly but surely will eventually get this back into the green and even back up to where it was a few months ago. I believe I was up 30% at one stage in this company, or ETF should I say. So again, consistency is key and you should never panic sell in my opinion, especially when the fundamentals haven't changed. In the ETFs, there is two here at the moment, up about 12.5% between the two of them. Financials are all in the green, so I'm very happy with how those are going. 3 of those are over the 50% mark, with one of those being up 65%. Healthcare, there is 3 stocks here. 2 are in the green, with Pfizer, another company that I've dollar cost averaged already this week, is down 3.4%. But again, we're going to leave it for today as we only have 50 euro to deposit or invest. Industrials, all 3 are in the green. We're up 9.6% overall. We have nothing in materials. Penny stocks, again, I mentioned this in yesterday's video. Hightide, which is a Canadian cannabis company, we started off with a tiny amount of shares. I think we put in about 6 euro or 7 euro overall, and we have about 13 or so shares at the moment. And I said that this was not like a normal penny stock in my opinion, where you kind of pump a load of money in and trying to make quick money and get out as quick as you could. This is more of a long-term speculative play for me. So that's why I started off with a tiny amount invested. Again, about 7 euro. We got 13 shares. They're trading at about 60 cents a share or so at the moment. And you can see the importance of starting small in these kind of sectors because they are very volatile. For example, yesterday we were already down 6%. So for that very reason, I'm going to put a further 10 euro in today, which will practically double my overall investment within this company. And that's why it's very important to start small, because if the company goes down further in value, you have a lot more capital to start pumping it up. And over time, I do believe Hightide fundamentals are very promising, so I have a lot of promise for this company going forward. But that 10 euro is in there ready to go when the OTC market opens. Real estate, as always, we just have the one, realty income. And in technology, we have my largest position up about 12%, but we have 1,273 euro invested. One of the companies here, Amazon, is in the red. Again, it's down about 3%, and that's mainly due to FX impact. So my overall price that I bought originally hasn't really changed. That's why I haven't actually dollar cost averaged in further into Amazon yet. But next week, if it drops even more, I will definitely consider doing so. We also have Microsoft, Apple, Alphabet, and IBM all in the green. We have nothing in utilities. So as you can see across the board here, there's a lot of stocks or pies well in the green, and there's also a lot in the red. Just goes to show the importance of diversification. So that's my buys for this week. We've put in about 657 euro, as I said earlier in the video, over the last week or so. So I'm quite happy with the dips we got to help improve my overall average cost. In tomorrow's video, I'll probably discuss, as I mentioned in the video, I might do a full in-depth video on iShares Global Clean Energy ETF. So if that interests you, please stick around and I'll have it up probably tomorrow evening. So with all that being said, that kind of brings the end to today's video. It was kind of a short one as such. I just wanted to discuss my plans of what companies I was buying further to take advantage of the market conditions. Remember as well that the markets are very volatile at the moment. So if I was you, I wouldn't panic sell, because you can see this time last year, in fact, March is when the original crash happened because of COVID, and you saw how fast the stocks recovered then. And a lot of people have been kicking themselves that they either panic sold back then or they didn't buy more at the time to take advantage of the massive sell-offs. So thanks very much for watching today's video. As always, if you're new around here, it'd be much appreciated if you consider subscribing. Again, we're only about 17 or so subscribers away from my main goal of 1,000. So that'd be brilliant if we could get that before the end of the weekend. If you have any questions, comments, queries or suggestions, please don't hesitate to comment below in the video. And also if you have any stock analysis videos you want me to look into as well, I'll be sure to do so. Thanks very much, enjoy your weekend, and I will see you all in tomorrow's video.